This week, the Federal Reserve raised interest rates another quarter, 4 percentage point here. This is the 11th rate hike since March 2022. ABC's Andrea Fujii looks at what this really means for your wallet.
This morning, another interest rate hike as the Federal Reserve tries to slow inflation, putting a strain on borrowers. The Fed yesterday raising interest rates by 0.25% to a 22-year high.
Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go.
Bad news for anyone in need of a loan. New car loans are at a 15-year high. Mortgage rates have nearly doubled since March 2022, meaning potentially hundreds of dollars more in monthly payments. And credit card rates are now averaging a record 20%, potentially costing users more than $1.7 billion in extra interest charges in the next year. But the rate hike does benefit savers, with high-yield savings accounts putting more money in your pocket. And more promising news, experts at the Fed are no longer forecasting a recession, but their watchful eyes remain focused on inflation.
I think it's becoming increasingly clear inflation is, headed in the right direction. It may take a while to get back to the Fed's target. I think the Fed's going to remain, strident in its language and won't need to raise rates after raising them today.
In the meantime, Wall Street cheering the news. The Dow is on a 13-day winning streak.
Now, as you just heard, Wall Street investors were relatively unfazed by that hike as the major stock indexes gained some ground immediately after the Fed's announcement.